Hello, everyone. Welcome to the first full week of the new year. My name is Dan Veru, Chief Investment Officer from Palisade Capital Management. Well, it was an amazing end to 2023 as stocks rallied much further than most predicted in the fourth quarter on hopes that there was going to be a policy pivot by the Federal Reserve. Short-term interest rates are now predicted to be lower in the coming months. And as we begin the new year, I think it's useful to go back and keep in mind to what the Federal Reserve has said previously, and not just what perhaps Wall Street's anticipating. At his last conference, Fed Chair Jerome Powell said inflation is still too high and ongoing progress in bringing it down is not assured, and the path forward is uncertain, as he has said over and over again. He also stated that he was assuring the people that he was committed to returning inflation to the 2% goal that they have stated over and over again. But many times what's said is often different than what's heard. And immediately, stock market participants and bond market participants were thinking that this is the pivot. This is the time that the Federal Reserve is going to finally start to lower interest rates sooner rather than later. Recent data indicates that unemployment remains pretty strong. Bond yields, while they are down from the recent highs as measured by the 10-year Treasury from 5% down to 4%, are holding steady. But there's no assurances that interest rates are going to come down very quickly. And our view is that this is more of a second half phenomenon for 2024 than a first half phenomenon in terms of when things are going to kick off and rates are finally going to start to come down. We have important inflation data coming out tomorrow with the Consumer Price Index. That's going to be a very important read into whether our economy is making progress on inflation. Our sense is that while the pathway up is linear, the way down might be jagged, and we might be setting up for some shocks along the way that could keep inflation expectations elevated and keep the Federal Reserve on the sidelines in terms of lowering interest rates. A lot of positive dynamics are happening. You had a UAW strike last year that resulted in much higher wages. We've got a big trend towards changing the supply chain as many global corporations are moving from just-in-time manufacturing to just-in-case manufacturing. That's expensive, and it puts a core underpinning of inflation in place that just makes things more expensive. We're seeing it in the semiconductor industry, solar panel industries, battery technologies, all those things that are really a part of the new economy. So this is going to create some volatility. So for stock investors, what do? Well, profits today are perhaps worth more than profits in the future. So sticking with companies that are profitable, generating a lot of excess cash, conservatively capitalized, that don't need to access the capital markets at an inopportune time. That's going to be very important this year. Last year, we had tremendous concentration among the Magnificent Seven stocks, and those valuations got pushed very, very high. What we saw in December was a broadening out of the stock market. Stocks that had underperformed for most of the year began to catch up because they were very much undervalued and had much lower price earnings multiples. So I think the perfect catalyst is that interest rates will come down, but they're going to come down at a slower rate than perhaps the market thinks today. We'll know a lot more, certainly after tomorrow, with the Consumer Price Index report. And Friday is going to kick off earnings season with JP Morgan. They're going to be the first of the major money center banks that will be reporting earnings. They're going to be a very important read into the health of the US economy and equally important, what's going on with consumers. So we'll have a lot more to talk about in the coming weeks and months as we go through what's going to be a very interesting year. Thank you very much for listening.
The information contained in this webcast reflects the views of Palisade Capital Management as of the date of its original broadcast, and such views are subject to change without notice at any time. All information provided in this webcast is for informational purposes only and should not be considered investment advice or recommendation to purchase or sell any specific security. While the information presented herein, including information obtained from third parties, is believed to be reliable, no warranty is made concerning the accuracy of such information. There can be no guarantee that any forecast discussed in this webcast will be realized. Consult your financial advisor before making any financial planning or investment decisions. Past performance is not a guarantee of future results.